Good morning, everyone. How you doing? It is December 25th, Saturday, December 25th, also called Christmas morning. I hope all of you have had or had, maybe you're watching this on replay, a very happy and merry Christmas morning. Hope it was full of smiles. Hope everybody got what they wanted and all of that good stuff. A couple of quick things. I've been doing a daily show most Saturdays for a couple of years now, which means we will do one today. In fact, I'm going to do two Saturday live streams back to back. I believe each will be about 15 to 20 minutes. I will, of course, welcome everyone who joins. Dion, howdy. Good morning. Merry Christmas. Thank you for all you do. John, Texas, Merry Christmas. Thank you for tuning in. First video this morning. I'm going to talk about 2022 surprises, predictions, guesses, just, one guy's opinion, not financial advice, but I know a lot of people are thinking about next year. So I have a long list of things that I am going to put out there when we look at 2022. How do I want to start this? I guess I'll just start at the top. So the first question is stocks. And man, if there's anything you should not follow my advice on, it's stocks. I have no money in the stock market. I choose not to go there. Wow, lumberjack with us this morning, man. It's I guess kids are already done with their presents. It's 11 o'clock out there. Thank you for joining and all that you do. Nathan, good morning. Where is Happy and Sunny? Well, Sunny is in my lap. Sunny right here. You were sleeping, and Happy. Come here, Happy. I actually moved Happy's bed over to me, and here's Happy. How you doing? He tired. All right, go back to sleep. There you go, Nathan. Thank you for asking. So first prediction, S&P. Again, stocks are not my thing, but lots of people deal with them, and hey, I can guess like the rest of them. So this morning, the S&P 100, I went ahead and put in the average at 4,700. I think it's 4710 or something like that. So that's where we're starting our guesses. That's what we're starting our guesses. Presents happened 4 hours ago. That's funny. So here's my guess. S&P 500. I am going to give you a range, and I'm going to give you a range for most of these. I believe the S&P 500 will see a low of 3920. And I believe there will be a high of 4,900. Now, obviously, anything in stocks doesn't get there in a straight line. But when we look at the S&P 500 from January 1st to December 31st, 2022, I believe the low will be about 3920 and the high will be about 4,900. Again, folks, if you want to play along and you want to give me your guesses, feel free to get out a piece of paper, write them down, and then you can leave your comments below. Noko Don, good morning. How are you? Thank you for joining. Next up, the 10-year. I'm a real estate guy. The 10-year is kind of important. It's one of those baseline numbers that we watch because it generally ripples through to mortgage rates. So again, we're going to round it. The 10-year as of this morning, December 25th, is about 1.5%. I believe we are going to see the range again will be 1.5 to 2.7. Yes, 2.7. I do believe inflation is worse and not transitory and all of that good stuff. So I believe we will start the year likely at the low and go up from there. I think that's pretty much my call for the 10-year note. Again, let me know below. Gold. Lots of you gold bugs out there. Gold has been pretty it's been a yellow rock for much of the year. But gold today, as of this morning, is about 1810. I believe gold will see a low of 1700 and a high of 2050. Again, I'm just guessing. My crystal ball is broken as yours. In fact, my crystal ball is up in Washington somewhere. I think Dion has it. But hey, these are just my guesses and my thoughts. Bitcoin. Lots of people into crypto these days. I'm not going to talk about all of them. I will talk about the big boy crypto, big boy Bitcoin in the crypto market. As of this morning, it's about $50,700. I believe the range for Bitcoin in 2022 is 41,000 up to 70,000. Again, these are not straight lines. It's herky jerky. You never know when the bottom or the top will be put in, but that is my range for Bitcoin. Next, real estate transactions. Real estate transactions. This is a big deal. Lots of other channels are talking about crashes and values and other nonsense, not understanding that real estate does not move that fast. Transactions, they can move pretty quick, right? We start getting higher rates, we head into a recession, people get scared. Transactions could fall. So, again, where do we sit as we end 2021? Right now, we're going to do about 6.4 million units in 2021. I believe we're going to do somewhere between 5.7 and 5.9. So it's about a 15% drop in transactions. That's not a drop in price, that's transactions. Median price. Median price. This is what other channels are talking about. Right now, looks like median price existing home sales were $353,000, 353. I believe you're going to come in somewhere between 350 and 390. Essentially, zero up to about, what is that? What's that, like 40 grand? Yeah. So somewhere between 0 and 10% will be housing values in 2022. Good morning. Merry Christmas, Real Freddie Z. Single family rent. Yeah, rents follow values. Not a lot of people get that, but if you watch this channel, you clearly understand that. Single family rents up 10%. I believe they are going to be closer to 10 to 12% next year. 10% this year, 10 to 12% next year. Yeah, this is single family homes. That's not apartments. I do believe there is a difference, but yes, single family. Then you need to talk about the single family rental market. And I want to simply ask you 3 questions. Actually, we'll make it 4. Wall Street. Do you think Wall Street is bigger or smaller in the single family rental space next year? 12 months from now, I believe Wall Street will be a bigger presence. And that means simply they own more units. One of the things that a lot of new investors or a lot of other channels talk about is, when will Wall Street sell? The answer is, in general, Wall Street's not going to sell. You don't understand what they've done. They bought these units cash. They've got tenants in. They've gone back to the bond market and gotten out all, or at least most, of their capital. And now they have a 6% bond. It is that simple. That is why you see Wall Street going after new properties. Wall Street's big next one, build for rent. We will do more units will be sold next year, build for rent, than this year. It'll probably double. It might go up 150%. I'm sharing these with you because all of this is demand at the lower end of the housing spectrum and will prevent 50% crashes because mortgage rates go to 4% or some other nonsense like that. Good morning, Caroline. How are you? Merry Christmas. And Julie, good morning. How are you? Merry Christmas. So again, Wall Street is bigger. Build for rent, bigger. Now, the wrinkle, foreign buyers. Foreign buyers have been, for the most part, quiet in 2020 and 2021. They've only suddenly come back. I posted something on Instagram last week from John Burns Real Estate Consulting, I think. If you're not following John Burns, you're missing out. He puts out a lot of great data all about real estate. That's on Twitter. He's a big Twitter guy. Foreign buyers are coming back in a big, big way. Foreign buyers, they will play in the rental game, but a lot of foreign buyers are going to buy the Park Place Boardwalk Class A stuff. Foreign buyers, I believe, are going to look to move their currency risk out and get it into the dollar. I think the dollar gets stronger from here, pretty much because rates are going to be going up. So again, these people talking about a real estate crash in 2022 are quite simply wrong or misinformed. There is so much demand other than owner ox. There's just no way to get there, at least yet. GDP. GDP is an interesting thing because if you've been watching my channel, you know that I feel we have a recession on the horizon. This is what I think GDP is. And again, I think GDP for Q4 is going to be awesome. I think the government, at least inadvertently, maybe on purpose, made people aware that supply chain was an issue, so people bought stuff early. Good morning, Chano. Merry Christmas, and the dude. Merry Christmas. Another amazing day. Yes. So again, I think Q4 GDP, which we won't even hear about till late January, I think will be north of 6%. It is going to be a good number. It will be a good. Think about all the people that bought early. They just and you're buying stuff not on sale. That's man, Christmas should have moved to July, but I digress. So Q1, I think GDP gets cut in half. It goes to 3%. I think Q2 gets cut by 50% or thereabouts and goes to 2%. I guess it gets cut by a third. And then in Q3, it gets cut again to 1.5. We don't technically go negative next year, but as you will see in a minute, that is mainly because of inflation. Good morning, Rocky. How are you? Thank you for joining. So again, GDP 3, 2, 1.5. I'm not calling next Q4 yet. I'll just call the first 3 quarters. Good morning, Mari from Tampa. Or I guess good morning from Mountain View. I guess I'm in Mountain View. So inflation. We have to talk about at least one inflation number, and we will use CPI. We will even use the CPI that is published, not the one that I calculated, which is running at 10%. CPI at 6.8. I believe CPI will peak in December and fall in Q1. I believe it will fall to 6.5% in Q1. Still a problem. Q2, it will fall to 6.2%. Still a problem. And it will fall again in Q3 to 6%. Still a problem. So again, I ask you, if GDP is up 2 and inflation is up 6, what is that really? -4. Now, of course, the federal government won't call it. They will celebrate 2% GDP growth. But you and I both know that's a -4 number. 2 last surprises as we wrap up video number 1. I believe the 40-year mortgage will be announced in 2022. I believe the 40-year mortgage will come only, and I stress only, to owner occupants. There is a possibility that is only owner occupants, first-time buyers, but I believe I will say confidently that the 40-year mortgage comes for owner occs. It will not be available to investors. One of the things that this administration will realize is that investors are pushing out first-time homebuyers. See other videos where first-time homebuyers are at 26%. So the answer to this quandary will be the government instituting a 40-year mortgage, which will mean mom and dad can pay more than an investor, which is ass backwards, in my opinion. But again, because people go on payment, they will be happy. Folks, you institute a 40-year mortgage, real estate values go up 10 to 12% almost immediately. It is nonsense. It is bad math. It is horrible logic. But that's not going to stop the administration from instituting a 40-year mortgage next year. Again, only owner occs. And then lastly, I do believe that we will see sometime next year a first-time homebuyer program. I don't know if it'll be a tax credit or down payment assistance or whatnot. I believe that the first-time homebuyer program will be somewhere between $15,000 and $25,000. Again, this does nothing for supply. It is all demand. It will make everybody who owns real estate worth more. It will help Wall Street. It will help, frankly, anybody in the one rental at a time family. It will help you because your net worth will go up. And oh, by the way, your rents will go up because, again, more demand for homes. People want prices go up. They can afford. They rent. It's this circular loop that the administration does not understand. So let me say good morning and answer any questions that are here. Anthony Russell, how you doing, buddy? Merry Christmas. Just finished your first video from this morning. Yeah, thank you for that. I appreciate it. Merry Christmas, everyone. The dude, a gentleman by the name of Jeff Booth, okay, has several videos and a book out trying to wrap my head around it. Are you familiar? Nope, don't know who that is. Roldan, Michael, what I hear you say is that 2022, more than ever, we must know our buying criteria to be confident that a great deal is long-term investment and not bail out when the economy gets shaky. Yes, yes, yes. I believe that a shaky economy shakes out weak hands. I believe the shaky economy will cause some owner occupants to either retreat or sell. I believe, Roldan, 2022 is going to be the first year in a couple where investors who do the work will find it easier to get good or great deals. That's what I see coming. Shaky economies are wonderful for investors who are prepared. Wonderful. Most shaky economies or recessions or whatnot, people get scared. I get excited because I do the work every day. So, yes, I am encouraged by what's coming. I don't feel good. I don't like seeing other people suffer. However, my job is to buy real estate that cash flows to make sure my family is supported. So, yeah, I am quite excited by 2022. Buzz Valley Bee Farm. Hello and good morning. Merry Christmas. So again, folks, thank you very much for that. Again, feel free to let me know what you think. Let me know which guesses, predictions, surprises you like. Let me know which ones you think I'm all wet or wrong with. Be nice, be kind to others. But yeah, I'd love to hear what you have to say. Uh, this is our first video. What I'm going to do in video number 2, which I will end this one and start another one, is I'm going to pull up this awesome book, One Rental at a Time. And we are going to talk about something that's at the end of the book, near the end of the book, called 21 Key Topics Every Investor Needs to Understand. We're going to go through several of them and just rap about it a little bit because um, I think more and more people need to get this book and really understand what's in it. So, Merry Christmas, Happy New Year. Again, let me know about your predictions. Hit the like button, subscribe. Again, remember, if we're going to help 1 million people, I need your help. I need you to subscribe, like, comment, and share, share, share. Ask others to join, do that, all this stuff. And yes, Dion has the crystal ball. I appreciate that. Thanks, buddy. Take care. I'll see you in a few minutes.